All right. So, if you have not been profitable in the forex industry, then certainly there is something you are doing wrong. All right. This is ageless. Hello, ICT traders. So, this very moment, I will be teaching you a particular concept in ICT, which is called two candle rejection trading strategy. And this concept has made a lot of traders profitable in the long run. So, like I said earlier on, if you have not been profitable in the industry, trust me, there is something you are doing wrong. And trust me, after you have learned this, you will never look at the market the same way anymore, because this is a strategy that is so easy and so very simple to follow. And funny enough, forex trading is easy. Like I always say, it is easy, but you need to understand what the language of what of price. ICT is the language of price. You need to understand it. You need to be able to speak it. Once you understand the language of price and what price does, trust me, the doors of opportunity into profitability in the industry will be opened onto you. So, before you continue, endeavor to subscribe to the YouTube channel, press the notification button, because as soon as other videos are being released, you should be able to see them. But trust me, this very moment, I wouldn't want you to what? To be disconnected. I want you to be focused, because what I will be teaching you this very moment is one of the things that have made so many traders profitable. So let's go with it and just follow me. Now look at this. Before we move on to two candle rejection, I must first of all establish some certain things which you need to know, or probably which you have already known, but I have to bring it to your consciousness again. There's what is called PDRA. Okay, a PDRA is a level in the market where price can have a reaction. If you check my previous video, I have laid more emphasis on what? On PDRA. I explained extensively about PDRA. You cannot talk about two candle rejection, or probably I cannot teach you about two candle rejection if you do not understand what PDRA is. So that is why I'm actually laying a foundation to it again one more time, so that when you understand it, it will what? It will enhance your what? Understanding about it. So now this is PDRA. The word PDRA means premium discount what? Array. Premium array, discount array. Okay. Now premium array, expect a bearish what? Reaction. Now look at this. This is a fair value gap. When price goes down, when price is selling, it creates fair value gaps along the way. And fair value gaps are the leg that price will use to move to the next what? To the next low, especially when it is what? Bearish. Okay. Now, as this price was coming down, was going down, as sellers were pushing price down, it created a fair value gap. Can you see this fair value gap that has been created here? Because fair value gap is a three candles pattern. Now, the space between the three candles is called what? Fair value gap. Look at it. This is a bearish candle. This is another bearish candle, but this is a tiny what? A consolidation bullish candle. So these three candles pattern created a gap. Now this gap is an array, which is what? Fair called what? Bearish fair value gap. So what will happen is that it is expected that price will what? Push back. Price will create a new candle here and push back into this fair value gap, and this fair value gap will now push what? Price downward. Just stay with me, you will understand what I'm actually explaining to you in a bit. Now look at this. This fair value gap does two things. As this array is, which is fair value gap, it does two things. One, it magnetizes price towards itself, and when price gets into it, it will what? Reject what? Price. That's why we are learning what? Two candle rejection this very moment. So we are this fair value gap is very important in this world, in the learning of this strategy. So please kindly pay rapt attention. Don't be distracted. Okay. Now, this is a bullish fair value gap. Can you see it? A bullish fair value gap. When price is what? Heading upward, when price is buying, or when bulls are what? Are in control of the market, when price is pushing upward, it creates what? A gap. in the market, or it can create as many gaps as possible as it's pushing upward, which is called what? Bullish fair value gap. Now, can you see this? There is a gap here. So it is expected that for price to move to the next level, now this fair value gap, we have to what? We have to attract price towards itself. And when price enters into this gap, then this fair value gap will push it away upward, because there has to be what? A reaction. Okay. Now this one is a premium array because it is on the high and is trying to what? Push price towards what? Towards the low, which is a discount array. This one is a discount array. Okay, it is on the low and it's trying to what? Its duty or its function is to push price upward towards what? Another array, which is what? Which is premium array. So for you to understand this, just watch my previous video and you have a good understanding of it. Okay, now again, now let's just move on. Now we cannot establish two candle rejection trading strategy if you do not understand this concept. Now, this is a what? A single what? Candle. Now, when you have a candlestick, right? A candlestick has two parts. You understand? It has other parts, but the main part where there could be reactions are what? The previous candle high. Can you see the high of the candle? Then the lower part is called what? Previous candle low. I want you to what? Take note of that if you don't know it before now, okay? Because this is going to be what? Very useful to the understanding of these two candles rejection. Okay, now let's go. Now, what about if you now have a price leg? Don't forget, I told you that a price leg must have what? Fair value gap. Now, can you see that this is what? A bearish fair value gap with what? It's called what? Price leg. Now, on this, we have what? Swing high. The high of that leg is called what? Swing high. The low of that leg is called what? Swing low. Okay, all right, I believe you understood that. Now let's now move on. Now there are what? There are what? Candles that are called what? Rejection candles. So it is very important you pay attention now, because very soon we'll be going to the simple strategy that will make you super what? Rich, super profitable in the world, in the industry. Okay, like I said earlier, just stick with me. Forex trading is easy, super easy. You need to understand the language the price is telling you. Once you understand the language, it's very, very easy. Now look at this. So let's first of all try to understand bullish rejection candles. Now let's take a look at this. Can you see? This price initially opened at this high, right? It came down with full body. So when it enters into a fair value gap, let's assume there is fair value gap at the low here. When it enters into a fair value gap, the function of the fair value gap is to what? Reject price. So this fair value gap at the low now push price upward. Now before, as it pushed this price upward, so this candle was able to close at this low here before a new candle was formed. So that is why we have this rejection what? Rejection part, which is the wick. Okay, can you see it? So this one is not a bullish rejection candle, because the body of the candle is almost the same as the wick. Okay, now this is a bullish rejection candle. Look at it. The price was opened at this candlestick opened at this low here. It came down with full body. So as it entered into a fair value gap, now the fair value gap pushed it up to what? To where it opened. Then it kept on moving upward. Can you see? So definitely this is what? A bullish rejection candle, because it has a long wick and what? A bullish body, which shows that this long wick simply means what? Rejection. And despite that, it also had what? It kept on moving upward. So which means what? A strong rejection. Price is willing to keep on what? Moving upward. That's why this is what? Regarded as a rejection candle. So I'm very sure you understand that now, right? Now look at this. This one with a long wick, okay, which is even longer than this. This is also what? A rejection candle, okay? Now, this is also a rejection candle. Look at it. The wick of this candle is longer than the body. It shows a strong rejection. So this is a rejection candle, which simply means what? Price is willing to continue what? upward in its bullish direction. Now this is also what a rejection candle. Likewise this and this. Okay, please, I want you to take note of these candles because I will be using it to explain this concept to you, this easy concept that have made so many what traders profitable. So I'm trying to simplify it to your understanding. Okay, now let's go. Now let's take a look at this. Now this is a bullish what fair value gap, a bullish price action that created what a fair value gap. Now on this fair value gap, we expected that the first candle that it will create now will push price into what, into the fair value gap. And when price gets into the fair value gap, we expect that what, there should be a reaction upward. So this fair value gap, it acts as a magnet. It will magnetize price towards itself. And the moment price gets into it, if the fair value gap is strong enough, it is expected that the fair value gap will push price upward. Okay, it will reject price. Okay, and when it rejects price, price will continue to move what, in the what upward direction. It will be bullish, price will be buying. So now let's look at the scenario now. Now this is it. So when price came into the fair value gap with a full body, you understand, and it was not rejected at this moment before this candle closed, this is not a rejection candle. This is the first candle that enters into what, into the fair value gap. Don't forget, this is a fair value gap leg. This is a fair value gap leg. The first candle that enters into this fair value gap is very important. That is what we need to take note of. Okay, now this is the candle that enters into what, into the fair value gap. As you can see, this first candle is a bearish what candle. Okay, and when it entered, what happened? It was not rejected before the candle closes. This is not a rejection candle. This candle is not a rejection candle. Okay, because if you, there is tendency that what, the next candle that will be created might what, might just push through this the low of this first candle, and it will what, keep pushing down. You understand? So which means that this fair value gap never had the capacity to what, to reject this, to reject price. Now let's take a look at this one too. If you look at this too, so this one, now look at it. So let's look at it. When price came into what, into the what fair value gap, it got rejected on this what, on this, creating this wick. But looking at it, there is still what, the bearish part of this candle is almost the same as the wick. So we cannot say this is a rejection candle because the creation of the next candle might just continue lower and price will what, disrespect this fair value gap and price will continue lower. Okay, so this is also not a rejection candle because the bearish body of the candle is almost the same as the wick. So I believe we have what, established that this is not a what, a rejection candle. This is not a rejection candle. Now what is now a rejection candle? Let's not forget, this is our fair value gap leg, a bullish fair value gap leg. We expect that price has to go up when it enters into this fair value gap. Now look at it. So look at it. When price came into this fair value gap on a full body, it got rejected upward. Now when it got rejected to where it's opened, you see, can you see this arrow shows the rejection part, that is the weak part, right? Now not just only that, price kept on what, moving upward again, right, see, with a bullish body. So which shows that what, price in the creation of the next candle, price will just continue what, to move upward. Okay, it will be in a buying position. Okay, this is a rejection candle. Okay, this is a rejection candle. I want you to take note of that. Now likewise, this one is also a rejection candle with a long wick and a what, a small bullish what, body. It shows what, in the intention of price moving what, upward. This is also what, a rejection candle. Okay, I believe you have, we've been able to establish that. Now let's take a look at this too. This is also a rejection candle because the wick is far longer than what, the bearish body. So can you see how long this is compared to what, the bearish body Okay, so price there is tendency that what price will continue what upward on the creation of the second candle. The moment the second candle is created, it will what continue upward. There's no way that the second candle that will be created will come down again to take out this low. No way, because there is a what strong rejection here. Can you see how long the wick is? So it means that price will continue upward. Now look at it. The same scenario happens to what with this too. This is a what? A rejection candle. Please, I want you to take note of rejection candle. Understand rejection candle, because I will be teaching you the concept very soon. This is also what? A rejection candle that we've talked about. Can you see? A long wick and a small what? Bullish body. It shows what? A intention of price what? Moving upward. This is also what? A rejection candle. A long wick with no body at all. Okay, there is no body. So it shows that price wants to what? Continue what? Moving what? Upward. So it want to be moving upward. Now, let's now move on. How do you now trade with what? Two candle rejection. Trading strategy with two candle rejection on bullish fair value gap. So we first of all start with what? We first of all start with bullish fair value gap first. Now, in two candle rejection, price has two opportunities to reject from an fair value gap, to reject from a fair value gap. Yes, price has two opportunities to reject from a fair value gap. I am going to be what simplifying that to you. You will explain, you will understand it in a little bit. Okay, now let's take a look at it. The first opportunity is this. Okay, opportunity one. The first candle is rejecting. Okay, now let's take a look at this now again. If you look at this fair value gap leg, this is a bullish fair value gap, right? That has been created. Can you see the gap there? So we expect that the first candle that will come in should be a rejection candle. And if it is a rejection candle, how do you now trade it? That is what I will be explaining to you now. I want you to pay attention, because in the ending part of this video, this class, you will now understand the concept of what two candle rejection. Now let's look at it now. Price eventually came into what? Into the fair value gap. Don't forget, I told you that fair value gap acts as a magnet. It magnetizes price in. The moment price came in, it rejected price. Can you see? It rejected price. This first candle came into the fair value gap, and it got rejected, and price kept on what? Moving upward with what? Bullish what? Candle. Can you see this where price is at the moment? This is a what? A rejection candle. This is a rejection candle. How do you now trade with what? Or how do you now capitalize on what? Trading with this rejection candle. That is what I will be teaching you very soon. Now don't forget, this is the candle that was rejected, right? Now this is where price is. How do you enter this trade? It is as simple as that. When a fair value gap is formed, when a fair value gap is formed, you wait for the first candle that will enter into the fair value gap. Okay, the moment the candle enters into the fair value gap, then you now hold on that same time frame. Please, on that same time frame. If it is on 4 hour, you wait. If it is on 1 hour, you wait for 1 hour candle to enter. Okay, now on that same time frame, you wait for the first candle to enter. Then the moment the candle enters into the fair value gap, you now wait to see if it's going to be a rejection candle. Okay, if it's going to be a rejection candle, you wait. At the moment it forms a rejection candle, then how do you enter? You enter after you have confirmed that what the candle is, the first candle that enters into the fair value gap is a rejection candle. Okay, the moment the candle closes, okay, you enter as soon as the candle what closes. This is where you will enter, because a new candle now is going to be, is about to be formed. Okay, the moment this close, then you enter immediately. Then you place your stop loss below the what, the low of the rejection candle. So there is no way that price will now come down to take you out, because this fair value gap has rejected what? Has rejected the price. Then this candle has already shown that the what? Price is what? Is ready to continue in its bullish direction. So you are safe to place your stop loss at the low of this rejection candle, then you enter just immediately after the close of what, this rejection candle. After you have confirmed that it is a rejection candle, you enter. Then where do you target? Then you target the next swing point. If there is going to be an old high swing point, or probably you just target 1:2. Your 1:2 is super enough to make you what, profitable, is super enough to make you rich. So your 1:2 is enough. Then you target your 1:2, then that is it. That is the entry method. Can you see? Reject two candle rejection is as easy what as possible. Okay, now let's continue. Now what would have happened is that after you have entered here, okay, if the first candle is rejecting, which is this one, right, predict the second candle continuation. Okay, this is a candle what, that is assumed to be formed later on. Okay, this is an invisible what, candle. Okay, now as you have entered here, so it is expected that the next candle that will form is going to be what, a continuation candle. Can you see it? It's going to be a continuation candle. That is how to trade two candle rejection. Trust me, if you pay attention in trading this kind of strategy, you are going to be profitable. You won't have problem with what, with taking trades. Okay, forex trading is easy, super easy, but you just have to understand it. Now what would have happened was that, look at this, that this is the candle that was rejected. So we expect that what, when a fair value gap rejects price, it is expected that this fair value gap will create a new fair value gap. Okay, now when price moves fast to one side, can you see, as price keeps on moving fast to one side, it leaves a fair value gap behind. It leaves a fair value gap. Can you see? The main purpose of a fair value gap is to form a new fair value gap as soon as possible. Now, after this fair value gap has been formed, it is expected that price what, will form a new fair value gap as soon as possible. Then price will continue what, upward to hit your what, targets. Okay, so that is that. That is how to trade what, rejection candle. Let's move on again. Now look at this. When you have this what, a bullish fair value gap, right? Now there is a fair value gap here. You wait for the first candle to what, to be created. Now the moment that first candle enters into the fair value gap, the fair value gap is expected to reject price. Okay, now if this first candle is a rejection candle, as we have in this scenario, okay, can you see it now? Price enters into the fair value gap, and it got rejected by what, by the creation of this wick. Then not just only that, it kept on pushing up with what, a bullish what, a bullish body. So this candle is a rejection. After you have confirmed that it is a rejection candle, you wait for the close of this candle. The moment this candle close, you enter immediately. Okay, on that same time frame. Okay, you enter immediately. Okay, the moment you enter from here, then you place your what, stop loss below this, because this is a rejection candle. The fair value gap has rejected it, so it is expected that price will what, will continue to what, to move upward, to move upward. Okay, so therefore the next creation, the candle that will be created next, will not come down to take you out. Okay, so then you target the next swing points, or the next PD array, or probably your what, your 1:2. Your 1:2 is more than enough. Okay, that is how to trade rejection candle. Now just look at this again. This is what, a fair value gap. You wait for the first candle to enter. The moment the first candle enters, is it a rejection candle? Yes, it is a rejection candle. You wait for price what, to close. Okay, if this is 1 hour, if you found the fair value gap on 1 hour time frame, you wait for what, for 1 hour candle rejection. Okay, confirmation. After it has closed, you enter. Then you place your stop loss at the low of this rejection candle. Then you target the next what, PD array, the next swing point, or probably the next fair value gap, or your what, 1:2. 1:2 is more than enough. That is how to trade what, rejection candle. So next we'll be moving on to what, to the next opportunity. Okay, the next opportunity. This video is getting too long, so I want you to subscribe to this YouTube channel, then press the notification button because I will be explaining this in a moment. All right, thank you.